Moving more to domestic triggers, we've got Mayuresh, Joshi and Manav Chopra joining us this afternoon. Mayuresh, we've been discussing some of the key fundamentals, the global picture, but even back home, today, of course, things are looking incredibly choppy. Just want to get what you're making of the recent weakness that we're seeing in markets. Are you once again...
Sure, I just need to button up. I'm sorry, because look at Vakrangi software. That one's just collapsed vertically in the last couple of seconds. Just pull up Vakrangi software for you. Take a look at this counter. We've been having a couple of these instances in the last couple of days. We're also approaching 20% lower circuits straight away is what we've seen as far as this counter is concerned. Massive fall in the last couple of seconds is what we've seen, and the stock's actually locked in a lower circuit is what we're seeing as far as Vakrangi software is concerned. We've got absolutely no developments whatsoever in terms of trade today so far. And you've got almost 1 lakh sellers already standing with the stock on a lower circuit is what we're seeing. So this one's taken a knock, and there have been quite a few of these instances now that we've seen a lot of these stocks start to just collapse. This morning, Rahul Chadda was talking to us as well, talking about how the mid-caps have seen a lot of froth and it's become extremely volatile out there. Another case where it's become extremely choppy, and Vakrangi today taking quite a knock. Is what we're seeing. 30 points lower straight away on this counter, and it's down 20%. Let's just try to pull up a YTD chart for you to probably put this fall into perspective out here. If you look at the YTD performance of the counter, it's been pretty stable, barring this today's 20% knock, which has made it into negative zone when we talk about Vakrangi. Now it's down almost 2.6, 2.7% is what we're seeing, but today's fall has been astonishing when we talk about Vakrangi software. And don't forget, you already have a couple of the other cases like Amtech Auto, where you've seen the stock turn extremely volatile in the last couple of days. You can clearly add this one to your list as well. 1.5 lakh sellers now is what we're seeing for Vakrangi software is what we're tracking so far. Just pull up Amtech Auto for you as well, along with Vakrangi, and get a quick mention going on both these counters. They've been extremely choppy. Amtech Auto stood down 27-28% after a 30% knock yesterday. Vakrangi software also down today pretty massively. In fact, if you recollect, Abha, just a few months back, you actually had Janus Capital pick up almost 2% stake in this company is what we'd seen. So that was another high profile entry that we'd actually seen in Vakrangi just a few months back is what we'd seen. LIC holds a substantial stake as well. I'm just looking at some of the shareholding pattern out here and what kind of names are we talking about. Vanguard again has some bit of stake in this company. Dimensional Fund Advisors, another name out there that's holding a decent chunk. Winsome Tree Asset Management also, Fidelity Management and BlackRock. BlackRock though is pretty nominal is what we're seeing, is what the release is talking about. And just remember, probably would have changed as well, looking at the way the quantum of the shares are actually being put out here as well, is what we're seeing. So that's Vakrangi there. You got another one, Central Bank of India also take quite a knock, 19 to 20% lower now on this stock. This one's also had a vertical fall in the last couple of seconds is what we've been seeing. Just pull up that stock for you as well and how that one's panning out so far. Central Bank of India also down 20% now, and it's been the last couple of seconds of stock. Yeah, it's been a vertical fall. Mayuresh, what's happening? Margin calls getting triggered with the benchmarks somewhat volatile. Are we seeing margin calls getting triggered? What's happening when we talk about the mid cap space?
Good afternoon, Priyank. Not really sure. Yes, I think that might be a possibility, but not really sure of the developments taking place.
Mayuresh, it still highlights, a concern. I mean, just take a look at the number of stocks they're just building. Videocons are down 16%. We've got Central Bank down 20%. We've got plenty of ILNFS. Amtech is down another 27-30% today. All of them down at lower circuit at 15 to 20% cuts coming in. Does this highlight a bigger problem in terms of the fact that perhaps this is the beginning of a sell-off, given the kind of run-up we've seen in the mid-cap stocks?
So clearly, Abhay, I think the mid-cap universe has seen a humongous run-up over the past few weeks. And clearly, I think the run-up has exceeded the kind of earnings estimates for a vast majority of these stocks. So again, the take is one really has to be stock-specific in the mid-cap universe. And you really have to follow a bottom-up approach where valuations are still looking very, very attractive. I think a lot of stocks have run up, which means that the valuations have exceeded even their long-term averages. So I think a word of caution specifically on the mid-cap universe.
Yeah, Manav, it's been a pretty sharp fall. You've got central bank. Take a look at this list. If you just pull up the CNX mid-cap index for you as well, you'll get a sense as to how much of fraud probably had accumulated and the kind of cut that we're seeing out here. 1.7, 1.8%. The benchmarks are down around 1.5% or so. So the mid-caps are cracking a little bit more than what we're seeing at the benchmark level. Individual names. Amtech Auto, last 2 days have been horrendous for that name. Pull up Amtech Auto for you once again. That one's down still 26, 27%. Yeah, so it's somewhere all started with this one. Central Bank of India, 20%. Vakrangi, 20%. These are all lower circuits that I'm talking about. And these guys have some good institution names that I've invested in them as well. If you look at the holding pattern, you've got Videocon Industries now down 15.6. ILFS Transport, it had been trading weak since morning, but it's just got a little bit more deeper now in terms of the way the cut's panning out. 13 to 14% lower. Indiabulls Real Estate, another stock that's been weak since morning, still down 9 to 10%. The JP Group counters are also reeling under pressure. Now, on the CNX small cap index, you've got some more names. Syncom Formulations down 10%. Metallist Forgings is another group company for of Amtech. That's the erstwhile Ahmednagar Forging as well, down 10%. Fortune Financial Services had a huge block deal yesterday. That stock's down 10%. Shreya Shipping, another 8% is what we've been tracking. All these stocks getting wiped out. Mastech, which have been outperforming with the Majesco listing, is also seeing quite a bit of a crack out here, is what we're tracking. But clearly, the focus is on a couple of these names that have just seen a vertical fall. The likes of Central Bank of India, Vakrangi, and Videocon. These three really stand out in this entire cool-off that we're seeing in the broader market space. Manav, what would you advise clients to do? What does one do with this kind of a cut on some of these names?
See, actually, it's a very catch-22 situation. Somebody holding a stock and the stock dips by over 20% at a lower circuit. I think it's more or less like a trap that has been faced in stocks like Amtech Auto or Central Bank that you just mentioned. But if we just highlight the stock of Central Bank, the stock overall has been in a very plain sideways range without much of a momentum into it, and a sharp sell-off today. I think it's very difficult for anybody to anticipate such kind of fall. I think mainly we may get to know some inside news later on, but looking at this kind of formation, the stock has actually eroded more of its previous few months gains, and such kind of a panic sell-off is usually led by more declines like what we observed in Amtech Auto yesterday. I think the mid-cap space would definitely be in pressure going forward. More or less also, if the Nifty breaks the psychological level of 8300, 8330 on the lower side, you can see the sell-off to continue more on the lower side. Also, if we look at the CNX mid-cap 50 index, it is forming a bearish head and shoulder pattern, and this formation usually hints for a trend reversal signal, I think, which would be confirmed in a day or two if the mid-cap index drops by another 2%. So I think the mid-cap space, one should definitely lock in their profits in case they are making any sum, or just book some or maintain a strict stop losses, or else trading with open position would definitely invite a lot of losses in some stocks, which is very difficult to determine at these levels.
It's become extremely volatile out there in the broader market space. But Mayuresh, what do you advise here? I mean, there are always traders or investors who are looking to catch a falling knife. Is it time to just stay away from the mid-cap space, let the dust somewhat settle out here? Because this one's been pretty sharp. I mean, Central Bank of India is still down 19%. The circuit's probably opened up there. But Videocon, on the other hand, is down 18%. And these have been vertical fall. Try and pull up another counter that's been added to the list is Goldline International. I'm actually honestly unaware of what the company does, but it's just showing up on the screen where another counter has actually seen a massive knock. 15 to 16% lower on this name as well is what we're seeing. Mayuresh, what's the advice? How does one approach this mid-cap segment now?
So clearly, Priyanka, I think one really needs to wait and watch. The macro environment has not improved at all. So I think the fundamentals have not changed for the Indian markets. We are very much the way we are domestically. And in fact, the global cues is what is now determining the market trend. So what happens with the yuan devaluation? We've already seen that. Any further depreciation will have ramifications on a lot of sectors and the economy as a whole as well. So generally, I think global demand tapering off. You're probably looking at what the Fed does. So in this situation, I think one really needs to wait and watch, let the dust settle down, and have a very, very stock-specific approach. I think you don't need to rush into stocks because they are falling. I think you need to just wait this period out, see what the markets are doing, and then probably take a call.
Right. You know, let's just turn our attention to what we're seeing overall as well in trade. I mean, a lot of those stocks, even the mid-cap pack, are from the realty, real estate pack. Mayuresh, just want to focus on that because we've seen a real drubbing on that front. And even today, whether it's the index or larger markets, once again, realty really pulling down things. Over leverage is one thing, but we're not even seeing any kind of respite for the sector at all. What do you feel going ahead? How much worse could things get on that front?
Well, I think none of the data points have improved for the real estate sector. I mean, you take any region in India, I think the oversupply is still there. The demand is not coming back. The new launches are not happening thick and fast. And obviously, I think the kind of inventory that a lot of these real estate developers carry on their books is not getting sold into as well. Add to that, I think the kind of debt levels that they're sitting on. So clearly, I think the operating leverage benefits not accruing to these real estate players. We are not seeing any signs of improvement. So the number of registrations, which is a key parameter, I think even that has not shown a significant improvement, at least for the Bombay region. And generally, I think even the commercial sector is looking extremely weak. So in a situation of weak capex, investment cycle not picking off, corporate expenditure not happening, I think you're going to see pain still persist for the real estate sector. So I think the pain would still remain for at least a quarter or two. And I don't think that's going to run away in a jiffy. So I think stay away from real estate stocks is what I feel at this point of time. But clearly, I think housing finance companies is something we'll still continue to prefer. But in a market like this, I think one should wait for declines, ideally, before taking a call even on that sector.
You know, Mayuresh, the interesting part is when we talk about this kind of a fall in a stock, there are analysts who are always covering these kind of names because a couple of these are pretty widely tracked. I mean, Videocon Industries, Vakrangi had decent set of analysts tracking it. You had Central Bank of India also, which is again widely covered. Indiabulls Real Estate. Any of these names on your under your coverage at Angel Broking, Amtech Auto, Vakrangi, Central Bank of India, Videocon, or for that matter, ILFS Transport as well?
Clearly, I think individually, I think all these companies are having some issues of their own. Take ILFS Transportation, which we do have under our coverage. The debt levels are extremely high, and if you see the numbers in the quarter gone by, the interest servicing itself took a toll on its bottom line. So yes, I think a number of projects that it has taken, the expectation is that once they start coming on stream, you'll see significant cash flows come through, but it's still not being very evident at this point of time. Similarly for the other companies, including the Amtech Group, I think it's a well-known and researched story over the last couple of days now. I think the debt levels are pretty high. You've got the FCCB issue probably hovering and causing headwinds onto that stock. So again, I think our take is that we're looking very, very selectively at mid-caps. What we'll probably like in the mid-cap universe is something like those mid-cap cement counters, but the expectation again is that the volume recovery along with growth dynamics should return to the industry over the next couple of quarters. Couple that up with improvement in realizations, you might see some amount of uptick happening on an EBITDA to ton basis for these guys. But again, I think very, very stock-specific action is what we want to take at this point of time. We're remaining extremely cautious on the mid-cap universe.
We have Ajay Srivastav joining us as well online right now. Let's just bring him into the conversation. Ajay, complete collapse that we've seen across the mid-caps, specifically on a few stocks. The fall has been very sharp. Central Bank, Videocon down 20% just in the last few minutes. What, according to you, is really going on here?
I think two things happened very clearly. That the headline investing has come back to roost right now because the people who had leveraged themselves to buy the mid-cap stories, to buy the headline stories are paying the price because the economy is not where it is. You see the results coming out and you've seen the panic all around the market, global market. Indian margin, of course, have been, the margin providers have been rather restrictive of late. to anything in the mid-cap category. The Amtech story told you the whole thing. So generally speaking, I think the discomfort that this economy was supposed to turn around and the mid-cap story was to be the resounding success of the year is coming into question for at least a week link. If you see the pattern is every single company going down in a hurry has had a weak quarter result. Just go down and see the results. Anything which was done recently well has held firm or at least in safe territory. Anything which has had a bad result, I think has been cleverly and cleanly out and taken for the slaughter at this moment. So it's a healthy cleansing in the market. I don't think we should necessarily worry about this.
You know, Ajay, the real worry that we're actually seeing out here is, you're spot on there saying that the mid-caps have been one of the outperforming space. They've had a fabulous run. It's not only the last 1 year. In fact, the last 18 to 24 months now, they've been clearly outperforming, and we've seen a couple of stocks really go 3x to 4x. The point here is, at a time when you started to see domestic flow really inch up, you are seeing a retail participation trickle in. Should they really get concerned with this kind of move that we're seeing on the mid-cap space? Because it's not the first time. Yesterday was Amtech Auto. Today you've got some 3 or 4 more stocks that have taken a 20% vertical fall in a matter of seconds. Should they be really concerned out here?
Oh yes, they should be very concerned, Priyank, because see, people have not understood the fundamentals of the mid-cap. The fundamental of mid-cap runs on low liquidity of stocks, which means when the momentum is up, you can get in. But the momentum goes south, you can't get out. So the issue is that mid-cap has always been liquidity. And I think people never understood or still don't understand the liquidity risk of mid-cap story. You can't get out in a hurry in these cases. And that's what is coming to boost right now. So there is a need to reassess. There is a need to understand that your exit in mid-cap is not exactly easy. That's one. Number two, the way the mutual funds have got into the mid-cap story, and we have been talking to other channels for the last few days, that there has also in the mutual funds, there has been an attempt to try to sell off a lot of mid-caps almost at the same time and move the portfolios towards the safe havens of pharma mid-caps and IT mid-caps, etc. Now, when all of them take the same view, the door is only that much narrow for a mid-cap, and this is the inevitable fall in price. So I think it's very clear what risk coming out is the liquidity risk of exit from mid-cap, which most investors do not factor in. They factor what is good on the way up, but exit is a very difficult process.
Fair enough. You know, Ajay, there have been mid-caps are generally painted with a broad brush, and time and again we have experts coming on board saying no, be stock specific, etc. But given the sort of pace and the intensity of the fall that we are seeing, would you still go out there and go out there and really take that call and say still go ahead and buy and select stories, or would you still advise caution given the liquidity risk that you're talking about right now, and given that we haven't seen strength pick up in the market, would you advise cautiousness in the near term?
See, let's understand what's driving the market. The driving the market, Abba, is that there is a flight to safety at all levels. And the flight to safety is go to the FMCG, go to IT, and go to pharma. Even in the whole carnage that you see today, you see the mid-cap in IT and pharma are still holding strong. And in fact, some of them have gone up tremendously in price. So, there is a rotation which is happening at this point of time. So depending where you are positioned, if you're positioned in the IT and pharma mid-cap, I think you can be safely ensconced in your portfolio for some time, book something or remain there. But if you are into the economy, leverage, turnaround stories kind of mid-cap, I think if you can find an exit, get out of it. Because honestly, the stock market today has no fundamental legs to stand on in terms of the economic performance as we see today, as we see the next quarter. So anything on the turnaround story, anything related to economy, power sector, transportation sector, and all those touted sectors by all the people, experts, including people like me, I'm not saying I'm the genius outside the system, but I think the economic sectors which are linked to economy, power sector, infrastructure sectors, those mid-caps are, I think, the worst place to be, if you ask me. If you are there, try to get out of it. Those are not bargain hunting places. Those are cemeteries of investors.
All right, Ajay, fair enough. Thanks for that take and perspective as far as markets are concerned and how one should be looking, especially when we talk about this mid-cap space. And even as we're looking at closing, the Nifty probably is trying to defend 8380, and I'll try and discuss levels with Manav in a minute or so. But that seems to be the case where that 8380 level was somewhat critical as far as the Nifty is concerned. Let's see if we do get an adjusted close also on above 8380 or not. But so far it's been looking pretty ugly, both on the benchmark as well as a broader market front. You got a 1.3% knock when we talk about the Nifty. The CNX mid-cap also reeling under pressure is what we're tracking. Let's try and run you through a couple of the stocks that are losing out today. Yes Bank, Kane India, PNB, Vedanta. Take a look at all these knocks, and we'll discuss the mid-caps as well. But first, the large caps. Yes Bank down 6. Kane India, PNB, all of them seeing massive cuts today is what we're seeing. Reliance Industries, take a look at that. 4% knock is what we're seeing as far as that stock is concerned, is what we've been tracking. So Reliance Industries also seeing a massive knock. One of the other heavyweights has cracked quite a bit. BHCL down 3.7%. Cement majors that had seen some bit of traction yesterday have again started to see a little bit of a cut today. You've got ACC, you've got a couple of the other names there as well that are seeing a little bit of a weak move. Ultratech stated to close lower. Ambuja also in negative. Surprisingly so, some of the exporters like from the IT fact started to cool off. Remember, the IT counters have been showing good resistance for the last couple of days. Today they were unable to hold on. Inflows down 3% at 5 o'clock. Remember, we'll also be we'll get to hear Mr. Vishal Sikka probably speak a little bit on the company and probably just pass on some commentary to the employees there. Beyond that, SBI again was under pressure. Idea, GAIL, HCL Tech, Z and Tata Motors all losing out is what we saw. TCS, Bajaj Auto, ICICI Bank, Asian Paints, Coal India, once again a little bit of an overhang coming in on that stock. In spite of that huge correction the stock's seen actually in the last couple of days, there's been absolutely no respite for this one as well, is what we saw. Coal India down nearly 1.5% today, is what we've seen. 83.84 is where we've actually got in terms of the way the closing's really panning out today. But there were a couple of few stocks that actually gained today. You had pharma majors like Lupin and Sun Pharma that really stood out among the gainers, but beyond that it was pretty weak is what we saw today, where you had a whole host of these banking, interest rate sensitives, and the mid cap has been where you've got a whole host of margin calls probably get triggered.
All right, in fact, take a look at some of those mid cap names that completely crashed today, especially just in the last few moments, and that's really what particularly was quite frightening. We saw Central Bank, Vakrangi, for instance, a 20% knock, Amtech another 30% knock on that particular counter. We had a Videocon also down about 60-70%. India Bulls Real Estate, JP Group companies, banking names, all of those are heavily in the red. Market breadth skewed towards the negative, and banking infrastructure, those pockets, banking infra, realty, across the board, those high beta names particularly are down between 5% and higher. Market breadth completely skewed towards the negative. In fact, very few stocks that stood out in the green. A Jet, for instance, up a 2% or so, a Religare or a Thomas Cook, but the attention was clearly on what was actually losing ground in trade today. Even on the small cap index, we saw heavy cuts coming in. Stocks like Lakshmi Vilas are down 10%, Orissa Sponge, Mastech was down 8%, Shanti Gears, for instance, Electrosteel, JBF Industries, Punj Lloyd, JBM Auto, another Amtech Group company, another 5 to 7% down there. Hotel Leela, Castex, again an Amtech company, down by 5% there. So it was clear exactly what kind of trend was emerging in trade. Manav, what are the kind of levels that you're watching going ahead? Because as Ajay also described, weakness seems to be seeping in. What's your call for tomorrow's session?
See, the next immediate support for Nifty will be around 8300 to 8330 on the lower side, which would likely to act as a make or break level for the markets. The kind of momentum that we've seen in the index from the early July, we have held the 8300 support, and the kind of decline that we are observing in the markets, I think it will be very difficult to preempt that whether will we break on the lower side, but I think let the market take its own course. Any closing below 8300, definitely one should square off their long positions, and below 8300 I think the markets would definitely turn more negative. So we'll have to see how markets actually plan out for next few trading sessions. The major broader range will be 8300 on the lower side to 8500 on the upside, and we have witnessed that markets are facing selling pressure at high levels. The resistance was 8600, and which was shifted to 8500 on the lower side. So I think any close below 8300 definitely will ring some bells, and the next downside targets would open up to 8100.
Mayuresh, when we talk about the way the markets have closed today, 8372, so you've taken out that 8380, sub 8400 as well, which had turned out to be a little bit of a support region for the last couple of sessions as well. do you believe there is enough downside from the current level, or you believe the worst case probably has been somewhat priced in, and we'll probably see limited downside from this level, just to get some market perspective? And this is more near term, immediate term, Mayuresh.
So clearly, I think from a very immediate perspective, I think, in my opinion, I think the downside still persists. So I think 8,250, 8,300 is levels that I'm probably looking at that the markets can touch. But clearly, I think from a medium-term perspective, we are still looking at that broader range in the market, unless something goes wrong drastically on the international scheme of things. So clearly, 8,100 to 8,600 is what we feel is the broad range for the market. But it is possible for the Nifty to touch those 8,250 levels in the near term.
All this gloom and doom, I just want to highlight the one bright spot in the market today, and that was pharma, of course. Slight news trigger also coming in on the back of certain FDA approvals for a Sun or a Lupin there, brokerage upgrades earlier this week, but still managing to hold out. A Lupin closing up 5 to 6% there. I want to get a call on both of you from some of these heavyweights. Mayuresh, in an increasingly risk-averse market, do you feel perhaps this is the one spot to hold on to?
We are very close to fair values for a stock. Lupin, the value a little bit on the higher side if you compare the long-term averages. And clearly the new launches that all these companies have received, in fact Sun Pharma, Lupin and Aurobindo Pharma, the couple of approvals that Aurobindo has got, both those products probably are very, very competitive. The second product approval that we got is a very small market share. Similarly for Sun, the approval that has come through our own take is $50 to $80 million in terms of top line, $25 to $30 million in terms of contribution. However, I think valuations are looking a little bit stretched at this point of time. So I think fresh buying is something that we'll not advise at this point of time, but investors holding on to these stocks at lower levels should continue to hold on.
All right, so that's as far as what we've been seeing in regard to the way the pharma stocks have been panning out. You know, probably the only rational move, Manav, that we've seen today has been the pharma pack, with those some bit of gains coming in, and otherwise extremely choppy and a volatile market. Lupin stood out with a 5.5% gain, Sun Pharma, DRL. And in fact, let me also add another consumption major, ITC, Manav. Any of these stocks, do you believe that there could be some bit of a technical move or certain technical strategy that one should look at?
I will definitely go with the FMCG space, then going for the pharma space. Actually, Priyank, we've already seen a good rally in the pharma space. Like Lupin has already rallied from its recent lows of 1600, closing to 1900. Somewhere the pharma space is nearing an overbought situation. Whereas if you look at the chart of ITC, it is still at the lower trading range of having support at the 310 levels, which also provides a very good risk-reward ratio. Looking at the overall formation and the kind of momentum that we've observed in ITC since it has breached its previous 5 days trading session with decisive volume, I think going forward this stock would see some sort of an outperformance like ITC, HUL, and in case if somebody wants to go from the mid-cap space, the stock would be Dabur. So going forward, the FMCG space is likely to see some more resilience and outperformance compared to the pharma space.
Right. In fact, ICC today also getting that upgrade coming in on the back of strength that's foreseen by some brokerages in the cigarette business, up about 4% today. So a few bright spots. But Mayuresh, just focus back again on where we really saw pressure, the concerns building up. Banks was the other area. I just want to come back to that for a moment, because we saw quite a bit of a rout. And while it was across the board, it's really PSU banks that continue to be a worry. What would be your strategy there going ahead?
Maintain a sector is that we would be within the banking universe. Yes, I think the initiatives on recapitalization are very, very positive in a structural manner over the longer period of time for public sector undertakings. But the core attributes are not improving as we see it. I think the asset quality pressure is still persistent to the system. Credit growth is extremely sluggish, and if you assume that the capex cycle takes an elongated time juncture, I think you're probably going to see more weakness come through in terms of recoveries and upgradations happening on the asset book. book. So clearly, I think though valuations are supportive for a lot of these PSU banks, the internals don't seem to be improving in a hurry. So private sector is the space that we will probably be in. Any sharp declines like that, like the one that we've seen today, I think becomes good opportunities. So Axis, ICICI, yes, is something that we still believe that the earnings growth would continue and the earnings growth would improve over the next 4 to 5 quarters.
You know, on one hand, we've been talking about what's been happening in the broader market, Mayuresh, even for that matter, the benchmark outlook. But somewhere down the line, it's also been reacting to what's been happening on the global currency front. We were just talking to somebody from London as well a couple of minutes back. It's very rare that you would actually bring up Kazakhstan currency, but it's down it's plunged 23% today. So clearly, it's getting the headlines, it's getting the attention on the back of this whole currency war. In fact, not to mention our currency as well is trading at 65.47. In fact, 49 is the kind of level that we've also seen in intraday itself. This has been the other pain area, isn't it? I mean, the way the currency weakness has been panning out over the last couple of days. Mayuresh, any thoughts here? I mean, we can talk of a portfolio churn that's moved more towards exporters, but in terms of ramifications, in terms of implications of a weak currency, is this market in a condition where it can deal with it?
So clearly, Priyank, I think I'm no currency expert, but I think the situations are very different what happened a few years back after the crash that we saw in 2008-9 and where we are at this point of time. So clearly, we've built up a huge amount of forex reserves to the tune of $350 billion, which suffices our import cover by a decent period as well. And clearly, I think the other emerging currencies have respective issues of their own. So if you look at Brazil, I think commoditized economy, Russia more dependent on oil, and so on and so forth. So clearly, I think Indian economy is still pretty resilient, but again I think we are not immune to the entire yuan devaluation theme, the deflationary pressures that we are seeing globally, and global demand expected to taper off. I think that is also very evident with the fall in Brent that we are probably witnessing at this point of time. So yes, I think the depreciation has been healthy, and again I think the governor, as he commented today as well, I think he is not overperturbed by the move on the Indian rupee so far. So I think if there are further implications in terms of how the yuan moves or how the global currencies pan out, yes, I think further depreciation is not ruled out, which will again have some amount of profound effect in the way equity markets will behave.
Right. Manav, before we let you both go, closing levels to watch out for. Let's just talk about what to keep in mind as we head into trade tomorrow, whether or not you'd be extremely cautious given what we're seeing across global markets as well, and any unforeseen cues that could come in from there.
Going forward, I think I like to recommend a sell on stock like PTC. The stock has breached its important support levels today on the intraday charts with above average volumes, and recently there has been a lot of exhaustion pattern observed for this stock close to the 100 DMA, and we haven't seen price actually cross it decisively, but it has been forming a series of lower highs. Chances are quite high that this stock would retest its previous June lows of 60, which is another 4 to 5% on the lower side, and possibly another 3 or 4% once if it breaches its June low. So there is a risk reward ratio of at least 1:4 at the current levels. The stop loss for the stock can be close to 66, having a downside lower targets of 58. And if someone wants to take a contrarian view in this market, assumingly that there are still some areas where you can pick some stock, I would like to highlight a stock that is Tata Chemicals. We have already seen a good confirmation, we have seen a good trend reversal signal into this stock a few weeks back, and the prices have already declined by over 12 to 15% from its recent peak of 526. Currently the stock is priced close to the levels of 450, nearing its long-term moving averages. So I don't see much of a downside into Tata Chemicals, another 2 or 3% maximum, but the chances of this stock to rebound and retest the levels of 500 is quite high. So having a good close strict stop loss close to the levels of 435 definitely provides a very good risk reward ratio and fresh entry into this stock.
All right, gentlemen, just hold that thought. Let me bring in another perspective here. Amrish Baliga is also joining us on the phone line. Amrish, thanks for taking this call. What's been your reading of this rout that we've seen in the mid-cap space today? Amrish, if you can hear me, what's your reaction to this rout that we've seen in the mid-cap space, where a couple of stocks have just fallen in a matter of seconds by almost 20%.
I think, it seems to be some sort of margin calls and at the same time concentrated selling by either institutions or the HNIs who are holding it. Because clearly these stocks are the ones which have performed extremely well in the past couple of months. And especially when there's weakness in the market, normally institutions or investors like these tend to book out. And when there is a rush to the exit gate, this is exactly what happens.
Right. Mayuresh, fair enough, but what would you advise now going ahead? We're seeing major weakness building up across global markets. The trend seems to be, increasingly risk averse. What are you expecting going ahead?
No, I think this weakness will continue because after a long time we have seen a panic like this happening in a couple of these mid-cap stocks and across a few of the large-cap ones. So I don't think this is going to end in a hurry. So I think it can continue for a while longer, and we could possibly initially see levels of 8200, and that's one area where we could take some support. But finally, I would be looking at a level of 8000, which I've been talking for a while.
So then, what's the advice here to clients? What's the advice here to investors and traders who are probably looking at this? We can't really club investors and traders together, Amrish, out there. But still, what's your advice to some of the retail investors rather who actually come back after being out of this market for a long time?
No, I think one should wait out for a while, but surely it would give you some buying opportunity at those lower levels because, once panic sets in, you will surely have those buying opportunities, and especially those who have missed out on this rally over the last 14-15 months. I think this could be a great buying opportunity when the market falls more. But when it comes to traders, yes, I think this has been a traders market for a while. And especially when since we were in this band of 8350 to 8600. So I think closer to, levels of 8200, 8250, the traders could look at buying from a point of view of a bounce back. But I think investors should wait for lower levels.
All right, Amrish, thanks for that quick check on what to expect as we go ahead. Dire day of trade there and not looking very encouraging. 8372 is where we've shut shop for the day. Okay, let's take a very quick break. We'll be back with more on the other side. Thank you.